Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your Stockminer Brian Johnson, and let's catch you up on where we are over the past week. Where we left off last week was talking about this huge consolidation that we had been sitting in, and the fact that we had been doing the same thing kind of over and over ad nauseum, and that was up, sideways, up, sideways, up, sideways, up. We were moving sideways. I said so. We were going to stay bullish, but cautiously bullish. As it turns out, this was a failed high base formation. We got a break to the downside, and so, as we talked about in the last video, we had two options. We could go long above here and short below here. As you can see, once we broke these levels here, that was your opportunity to get yourself to the short side. Now we've dropped. Haven't dropped a lot, but we are down at least 100 points. So we're in. Should be making some money if you've been following along. And there's maybe some opportunity for a little bit more going forward. I really like what I've seen the last couple of days. Let me just remind you that nothing's broken from the bull side yet, and there isn't anything devastating yet as well that's been released. And so the selling, while it has been good and consistent, it hasn't been anything major yet. So we don't want to take anything away from the bears and the work that they've been doing. And I certainly would not be surprised to see a bit more downside action tomorrow into maybe tomorrow afternoon or even Friday sometime. Maybe we see a bounce. If we don't see a bounce tomorrow, maybe we see a little one on Friday. Fridays tend to be a bit more bullish. And so we could look for that maybe coming into late tomorrow and or the Friday time frame. As it is right now, this moment though, let's look and see if there's anything else the bears can do. As you can see, the Dow is dropping, not quite as much as the rest of the markets have, especially the NASDAQ. It's one that's really been hammered lately. Apple's a big part of that. It has dropped about $40 in the last, 3 days or so. But let's take a look at the Dow. If you guys like to play the diamonds, we still have opportunity back below this 13.4 area to maybe grab a little bit more of that. And then what you're looking for is a couple of things. You're looking for the 200 here for your next support level and or the 20-day moving average. Now, most of the 20-day moving averages on the other indices have already been struck and or closed below at this point. So the Dow's a little bit behind everything else in where it's at, but that's a good thing, actually. I would, like I said, I wouldn't be surprised at all to see some more bearish action tomorrow, or maybe, probably tomorrow sometime. And if that happens, what you're looking for then is the 20-day moving average. That's going to be your first spot. So 13,360 followed by 13,300. And then beyond that, I'm going to be targeting most definitely the 50-day moving averages. Some of the indices, as you'll see, are getting very near and closing in on potentially heading towards this as their next area. We'll talk about that in a second. But take note here that this high base is a broken high base. We wandered sideways for a good 6, 7, 8 trading days or so before finally falling through as a broken formation. Does not mean that it can't have more bullish action. It just means it's no longer a high base. We would now call this a bull pullback for the time being until otherwise shown. Maybe some really heavy selling action comes in and we drop way down below these areas here, but until we clear about 13,000, I'm really not all that concerned quite yet from a bullish standpoint. But it is, to be honest, it's great to see this pullback. It's healthy for the markets. It's good for the markets. It allows some of the bulls to take some profits. It allows the short sellers to get in and make some money. And then it'll allow, if the bulls decide to, it'll allow them to get back in at a much better level. And so these type of pullbacks are much more healthy, in my book, than these high bases are when we're up here towards the top. Also take note that QE3 is out of the way, and now we're starting to see a little bit of a drop. Since QE3, we really haven't had a whole lot of motion. And if the bears get going, guys, listen, they will wipe out, literally wipe out acreage and acreage of space in no time at all. When they start to really get going, it doesn't take them long to wipe out days, and what took the bulls days, weeks, and months to accomplish will take literally days and maybe a couple of weeks for the bears to demolish. Apple's a good chart. Maybe we'll look at that here and you can kind of see that. Well, as a matter of fact, let's do it right now. What the heck? Here's Apple on your daily. Now look at this. It took 1, 2, 3, 4, 5, 6, 7, 8, 9 days or so to get ourselves from about 660 up to about 705, and literally 1, 2, 3 days to get right back to 660. So this is a good illustration of what I'm talking about. And Apple as a whole is, of course, just a very strong stock, very strong stock. But this is the type of action you see. Once the sellers come in, once the profit takers come in, everybody panics at once, and they all jump out, and they all start running for the hills all at the same time, which accelerates all of this selling pressure. Now, take a look at this. We're down below the 20. We fall into the 50, and we'll be back to the 650-ish range here. And that 650-ish range goes all the way back to the beginning, middle of August. So within potentially, heck, we could maybe do it tomorrow. I mean, the way it's traveling, within a couple days, we could see a strike of the 650 area before too long. If that happens, we could literally take care of what, a month, almost 2 months, let's say a month and a half worth of work in a week. That's just how the Bears go. So while we were up here, you wanted to be bullish, but you always wanted to be, especially up here, you wanted to be bullish, but you want to be cautiously bullish up in these areas here. Now that we have the fall, let's see if we get some follow through. Let's skip on to the NASDAQ, and this is what it's doing in the NASDAQ with Apple falling the way it is. Nice big moves. By the way, if you are part of the newsletter, or if you were part of the newsletter, my call for a short was back below the 28.30 mark. This worked very, very well, right down here into the 27.70-ish area, and made for a beautiful short trade for those that got in on it. So, once again, shameless plug, 28 bucks a month, guys. If you do any trading on the NASDAQ, just this one trade alone would have more than covered the cost of a month's worth of the newsletter at $28 a month. This little drop right here that was brought up. I actually had shorts on all of the indices, but so even if you would have played the SPX or the Dow, you would have made enough money to pay back $28, which is all the newsletter costs. So great short right here, pushed us down into the 200, gapped it, ran away from it again, back into some support. So maybe we start to see it slow down a bit, but 27.70 would be your next area to be looking at to the short side there. You can see, just like Apple, how quickly this thing accelerates. Now we're already at and below the 20-day moving average, not one but two closes back below the 20-day moving average. So where the Dow hasn't reached it yet, the NASDAQ's firmly below it by not one but two candles. So don't be surprised if the Dow makes it down to at least, if not below, the 20-day moving average, which it hasn't done yet, which gives you guys opportunities to maybe jump into that thing to the short side and still make a little bit of money. Just wait for the break. Just wait for that break that I gave you. Wait for your numbers. The next lower level is, of course, as I've talked about, the 50-day moving average. Just a beautiful place to see some support if and when it gets down in there. I would expect it to maybe stop, pause, break, hold on for a little bit if and when it gets back to this 27.40, 27.50 area. From the weekly too, look at this. We've got a nice candle going on right down here to the short side. So the weekly showing good, well, I should say weakness, strength for the bears, weakness overall, 2.8%. in 1 week. Now we have a couple days left. We can recover some of that or all of it. We don't know yet. But as it is right now today, with 2 days left to go, almost a 3% drop over the course of a day. In my newsletter, I am talking a lot about this particular pattern right here and what it could mean for the bears. And there's just some really nice things going on up here, and one of the last caveats for the bears to really hang their hat on, but I think there's some good opportunity there. A 60-minute SPX. Look at this. See the channel that we drew? Here was a little throw over. Got to know how to recognize those. Little throw over here and right back into it. Came back below it. I could actually tweak this line ever so slightly, bring that down, and you'll see that we hit it here. We hit it again here. Yeah, for some reason this line is different than the one on my newsletter, but this one here gets struck underneath and struck underneath again. And then we see the drop. Now, the aggressive entry for my newsletter subscribers was 1450 short. And then the other trade was back below 1440 short. So 1450 gave you 10 to 20 points. Back below 1440 gave you 10 points. Actually less than that. You wouldn't have gotten in right at 1440. So maybe 5 to 8 points is what you would have made on this move. You'd still be in good shape. Keep in mind we are back to this level here. Maybe getting a head and shoulders pattern, but still a little early to tell, so I'm not going to jump on that bandwagon quite yet. You're looking for pushes back down below here if you want to start another short position. Just keep in mind that we are running into some lower support areas here. Number one being the 200 period moving average on the 60-minute chart, and number two, right at and around the 20-day moving average. Now, like the NASDAQ, we've not only broke it, but we've closed below it. This is why I think the Dow is going to eventually make it down there. But this is back below it here for at least a day. If it bounces, look for it to maybe come back and at least, if nothing else, retest this 20. The bulls are going to try and do all they can to try to reclaim this in the near future. Down below us, we've got this nice little level here that we've been looking at, and as I said, if it reaches the depths of what the NASDAQ's doing, it'll be 1410. So here's the channel we've been following. Keep in mind that we hit it and we hit it and we hit it and then we hit it and then we pulled away, only to go and, let's see, hit it, and then we broke above it. This was nothing more here than I call it a FOBO. Some people call it, I call it a FOBO, F-O-B-O, fake out breakout. It's just an overthrow is what it is, technically. We held it for a while, but weren't able to hold it for long. I have said in previous videos that this blue line is going to win. It's just a matter of time. It wasn't a matter of if. In this case, it consolidated sideways, looking like a nice setup for a head or a high base, and then it failed, like we saw in all the other indices. So we're back down into it, looking to probably hold here. I think if we get back up into this area, I would probably look for this line to hold again from the underside again. So we'll see if it does push in and below these levels. You're looking at and targeting for the 50-day moving average. VIX on a daily showing strength as we've now popped back above this line right here. We'll see if that holds on till the end of the week. But as you can see, we've been in this big channel down since about July, and now we finally get a break of it. That is very bullish for the VIX and should be bearish for the indices, keeping in mind that we're still below the 20 mark, which is where I think we really start to lose a lot of complacency within the markets. We're still well within a very complacent market here. These 13 areas are just manna from heaven. If it falls back into these areas, these are excellent opportunities to start looking at trading the VIX to the long side. I can't believe we've been this low. We haven't seen the 13 number since 2007. So when we got back down into here, it was just salivating for a long trade on the VIX. The weekly's showing us the same thing too, as you see it coming back up into these areas again. But thing to take note of, we're still below 20 and things are still okay for the time being, but the trend is now slowly starting to maybe fade more towards the upside. We need a little bit more time to really confirm that, but as it is, as of today, sure looks like maybe they have a good, healthy start on something here. If that's the case, expect more of a drop in the markets. I really do think there's great potential for some lower prices to come here. FAS, okay, had some trades back below some of these levels, all given to you in the last video. So let's move forward, and you'll see that it's also fallen into some support right here. Really like this one back below about the 103 mark if you want to take this one short. To the long side, I really don't have any longs I'm ready to jump on quite yet. Yes, I have some aggressive ones, but I'm not ready to really get aggressive at this point with FAS. So we'll stay with the more conservative. I like it below 103 short. Maybe back above 106 would be a long and an aggressive long. I won't commit to that one. But I will say that's probably your first place to start looking at a long play in the FAS. And from a daily, it's the same thing. Why? Because we looking to maybe come back and retest this 20. You'll notice we have 1 and 2 closes below the 20-day moving average as we do on the NASDAQ. And you can see that anything below here, I love the 100 mark. This is where this trend line's been rolling up and through. And if we can get back below about 103, good potential for us to maybe find this 100 mark after that. To the upside, if we can get back above 106, then we'll clear the 20-day moving average. And then, yeah, like I said, it's aggressive, but there's a shot there. You might be able to take that long. Back above this 200 here. So if you want to wait, get patient with this. Back above 19 is probably your next mark for the FAZ to the long side. Short side, I'm not going to give anything out on that quite yet. We are trending up, looking very, very well in through here. Had the break above these levels. I think 18 was my call long on this one. If so, that one paid off pretty well with a 50-cent trade on that one. And you can see we're buried ourselves right back into A, the 20-day moving average, and B, this overhead channel line. This is the one to beat to beat. So if we can get back above 19, we should be in pretty good shape, and would not be surprised to see us approaching into the $20 mark and or the 50-day moving average, whichever one is. Well, I'd say either one of these would be a great overhead target. So at this point, back above 19, if we could pull a buck or a buck 50 out of this, great. It's a nice trade. So, big channel, been there for a long time, looking to see if we can get some break. That would require A, further push down in the markets, B, maybe a spike up then in the VIX is what we'll see along with it, and C, some profits with some entries that I've now given you. And we will probably shoot again for next week. All right, guys, there you go. Weekly wrap up. Sign up for the newsletter, $28 a month. If you really want to do this full time like I do, then you want to take the mentoring. It's an entire basically college level course in trading. And it's just you and me, one-on-one. There's nobody else in the group. We meet when it's convenient for you, which means after work or on the weekends or whenever you're available, early mornings, late nights, I don't care. It'll make no difference to me. And I have an entire course I run you through. And so if you ever want to really take the next step in your trading, talk to me about the mentoring, send me an email about it. I'll send you some information. We'll see if it's right for you. And until next time, happy trading. Talk to you later. Bye.